Hi, guys. Welcome to the 11th episode of WTW, the weekly trading wrap up, where we talk about the weekend markets from a trader's perspective, what to focus on, and what to ignore. So let's begin. Well, this was an action packed week, the last week of January 2025. Congratulations, we survived. As usual, we start with the S&P 500. This arrow denotes Monday. So this arrow is Monday. This candle is Monday, Tuesday, Wednesday, Thursday, and Friday. As you can see, Monday was a large gap down day. This entire week was dominated by AI, and everybody was anticipating what was going to happen on Wednesday, which is right here, because of the Fed and earnings season starts. And we had earnings for some three big market leaders in Meta, Microsoft, and Tesla announcing after market close on Wednesday. So coming into the week, we had some big news already, and the Fed and big tech starting to announce earnings. But we got surprised over the weekend with the AI talk. Okay, so let's get into Monday and discuss it more clearly. So over the weekend, DeepSeek, China's AI came out called DeepSeek, and they apparently are amazing. They didn't use any NVIDIA chips. They did it super cheap. They have an AI model that's 100 to 1,000 times better than OpenAI, and etc. etc. So the market gapped down big. Okay, but as you can see, it opened up down about, I don't know, maybe 2% something, can't really see, but it finished the day higher. Okay, so what is of note here is that a lot of AI stuff got killed. Okay, NVIDIA specifically. Okay, look, this is Monday on NVIDIA. It closed on Friday at 143-ish and continued to go low for the day to 118. What is that? That is like a 16% drop. Okay, you had big drops in all these AI stocks. Okay, with notable exceptions. Okay, like Meta. Okay, this is Monday on Meta. It opened up down, but then closed up on the day for other reasons. It destroyed earnings. Okay, but let's get back to NVIDIA. As you can see, huge drops in AI and AI-related stocks. Like a lot of the uranium companies were going up due to this. And power companies like GEV, Vernova, sorry, it's a GE spinoff, down big. So like 20 to 30% drops in these stocks. So this stock that I own, Constellation Energy, it owns a lot of power plants. This too was down about 20%. You had huge drops in AI and AI-related stocks. As you can see, they rebounded at the end of the week, but they didn't make it back to their highs. Okay, so there's still a question when it comes to this AI play. However, what is of note is that we saw the SPY here start low and then finish at the highs. It shows strength because even though AI was down and it was a market leader, so it caused the SPY, excuse me, I was already there. It caused the SPY to drop, 1.4%? And we saw the stocks were down 20% plus. Okay, and those 20% sector managed to drop the SPY down 1.4%. That's huge. I mean, that's not that huge because it shows that other sectors, it's huge for them, but not for SPY, because it shows that there was strength in other sectors like small cap started up strong, but then ended up down small. We had XLY, which is consumer discretionary. This is Monday. Okay, it gapped down, open, but then boom, closed at the day, up on the day. Okay, so consumer discretionary stocks, which is what the general market. I mean, if the general market is doing weak, consumer discretion is going to do weak. If the general market is doing strong, consumer discretion is going to be strong. It's a very cyclical stock. Okay, it's on defensive. It's very cyclical. We had what's another one? Healthcare. Healthcare. This is Monday. Healthcare. Look, it opened up and continued to go up on the day. Okay, it consolidated the whole week. But the point I'm trying to say here is that despite the fact that you had an AI crush on Monday, huge gap down, it was eventually filled, but huge gap down, the underlying forces in the market are still very strong, still very bullish. So that's what we should get out of Monday's session. Okay, as of course, like yields went down too. We should always look at that U.S. 10-year. This is Monday. It started going down. Remember the overall pattern down, started breaking up, and now we're still. My view is still that it's going to go down, continue to drift lower. Okay, so everything went down. What happened on Monday with gold as well? Gold also saw its way down. We'll get to that later, but we'll get to this all-time highs later. But on Monday, it gapped down. So you had a lot of fear in the market, okay, on Monday. Some macro came out, like new home sales, but we don't care. Even though they're up, we don't care because that's not a macro that we pay attention to. It's not a leading indicator type of macro. So we don't care about that one. So overall, Monday was dominated by AI. And we have to note that the entire market, the rest of the market generally was strong. Okay? So Tuesday comes along, boom. People are starting to rethink the AI sell-off because, I mean, it's a Chinese AI. Maybe they're hiding stuff. Nobody fully trusts China. I don't trust Chinese data. So this DeepSeek might not be as good as they say. They're saying that a couple of people that I follow said that they had to use some NVIDIA chips. They lied that they didn't use them. It was not as cheap as they said it was. So I don't know what's the real story. Who knows? But the point is that the market rebounded and recovered more than half the drop in 2 days. So it was this first minefield, the AI minefield, is sort of answered on Tuesday. Okay, not fully, but sort of answered on Tuesday. Okay, so what the market was looking forward to was probably the Fed and earnings of big tech companies coming up the next day. Okay, so Tuesday showed that. Showed the strength of the market, the underlying strength of the market that we suspected on Monday, and we got on Tuesday. Again, you guys could always follow me on X. I mention all this stuff as it's happening on that day. Okay, so on Monday, you said the underlying market is relatively strong, and on Tuesday, it confirmed that. Okay, we also had a slew of macro data on Tuesday, but it's useless macro data. A lot. We had the Case-Shiller house price index, which a lot of people follow, but it's it's completely useless for our purposes. We had the Richmond Fed manufacturing, the Dallas Fed services, CB consumer confidence. There are so many macro points on Tuesday that are completely useless to us, so just ignore them. Okay, we know which ones to look for. We've been going through this for weeks now. Okay, so what is of note is that we're in the middle of earnings season and people are anticipating Fed and earnings on Wednesday. Okay, so let's move to Wednesday. This candle, right? This red one here. Okay. Before the Fed, the Bank of Canada announced a 25-point cut. So the Bank of Canada has been cutting rates a lot. Okay, because the market is weaker. Okay, there's more deflation in Canada than there is in the States. In the States, it's holding steady. Okay. When we had an important PCE inflation number coming out on Friday, but we'll get to that on Friday. But as of right now, the Bank of Canada announced a cut. And if you can see the Toronto Stock Exchange here, this is the Toronto Stock Exchange, okay? On Wednesday, it's this candle right here. So this is Monday. Let's mark it here. This is Monday. So Monday went down with everybody else. And then Tuesday coming back, and Wednesday, it was positive for the market. So the Canadian market likes the fact that Canada is lowering rates, okay? But, now that we're here, let's just look at the Canadian market here. Okay? It is at highs. We're coming to all-time highs, okay? And it did break out of a high that it set on March 22nd. It played around with it for a while, but then broke out for real around the summer of 2024, retested, and then came back after, okay? But this move here in the Canadian market is it went from 22,235, which is the previous highs, let's say, and now it's at around 25,500, okay? So that move is about, 10, 3K, so it's about like a 10, 15% move, maybe 12.5, 13% move, okay? And it broke out in the summer of 2024, okay? So you have a 13% move starting in the summer of 2024. Now compare that to the SPY, the S&P 500, the US market. The US market broke from all-time highs in the beginning of 2024, okay? Which is like end of January, beginning February 2024. And the all-time high was 480, and we're at 601 now. We were a bit higher, okay? So that's, what is that, like a 25, 23, 24, 25% return? And it broke out sooner. I mean, the US is a much, much better market than Canada is what I'm trying to say. So that's why I tend to focus my trading in the US, okay? That's for Canada. But the EU also lowered rates by 25%. The EU, we'll get to the DAX. Okay, this was Monday right here. It's market. That's Monday. Okay, but we're talking Wednesday. This candle broke out to new highs, okay? So the European markets love, let's see what the French market did. It still sucks, but nah, not that great. But the EU is lowering rates because they too are not seeing any inflation. They're seeing deflationary pressure, and they want to stoke inflation at this point, I'm guessing. Because, I mean, they just keep lowering rates. But Canada, for sure, Canada is very deflationary. Like, if you see the inflation prints, they're going down by 0.1%, 0.2%. It's like they're always missing expectations. So Canada is a little bit more deflationary than the US. Okay, is that a sign of what's to come in the US? I don't know. We'll see. Let's get back to SPY. Okay, so of course, we're looking for the two big things. This is Wednesday, this candle right here. We're looking for the Fed, and when the Fed came out, basically nothing. Everything is expected, okay? They announced a no cut, okay? So we're still at 4.25%. Let's see what the Fed funds has to say. Fed Watch tool. Still at 4.25% as expected, but let's see if the expectations changed for December. Remember, they were expecting one rate cut. Okay, one rate cut by the end of December. So I'm looking at December, the end of December of 2025, and we're still at, not now, it's like one, maybe two. Two is starting to dominate. Interesting, because we're here, we're at 4.25. So there's like a 89% chance that it'll be lower, but the vast majority of it is one and two. It's starting to get better. Before it was one dominated. Okay, now we're starting to get two cuts. So it's positive for the market. Okay, rate cuts, but remember we talked about how rate cuts, the market narrative is that they want rate cuts, but it doesn't have to be that way for the market to go up. However, if you do get these cuts and they're slow, not super fast, not reacting to a tanking market type of cut, but a cut that is like anticipating slowly dropping inflation, like in Canada and Europe, okay? And if that's the case and they lower rates slowly, that's positive. We get into trouble when rates have to fall because the market is tanking and the Fed is behind the curve. Here, the Fed is ahead of the curve. So we see that after the Fed meeting on Wednesday, it is more it was a dovish meeting because the odds of two cuts instead of one increased for all of 2025. Okay, so that was a relief. That was the first minefield that we had to cross, and the second one is Meta, Microsoft, and Tesla earnings. So let's see what Meta did. We saw that before. Okay, this was Meta on Wednesday. It beat. You can see the earnings. It beat the bottom line by 18%, and it beat its top line revenue growth by 3%. It beat everywhere, okay? And it didn't do that. It sort of went higher, but not that much. The next day you'll see it. So it did go up, reacted very well. However, it wasn't super amazing. What is that, a 5% return here, maybe 3%? Because it already anticipated earnings, okay? It came down from 595 all the way to 689, okay? The majority of the move happened before the earnings announcement. Okay, this was a classic case of majority of the move before the earnings. Okay, so usually stocks fall after that. But the earnings were so good, and their guidance was good. Everything that he said, the market loved, so it still went up. Okay? Although, if you bought options right before, anticipating a huge move up, you probably lost money on the volatility crush afterwards. Okay, so that was Meta was great. So we had 1 out of 3 that was good. What about Microsoft? Microsoft, not so good. Okay, this was Wednesday. Even though they beat, if you look at their earnings, they beat by 3% on the bottom line and 1% on the top line. Maybe it wasn't enough, but I guess the guidance wasn't that good. Microsoft is a perennial loser here. It's stuck within a range. Okay, so Meta great, Microsoft bad. What happened with Tesla? Tesla missed. As you can see, Tesla missed by 5% on the bottom line and 5% and change on the top line. So where's Wednesday and Thursday? So this is Wednesday, okay, at the close. So Friday is when you would see the effects. So it still went up. It went up with bad earnings. That would be a positive sign. So 2 out of the 3 tech stocks that first announced during earnings seasons were positive results. So we had a good Fed that did exactly what was expected, and market liked it. Actually, a little bit more dovish than it was expected. So market loved the Fed. Minefield number 1 passed, and minefield number 2 passed. 2 out of the 3 tech companies traded higher after market, which is, I wouldn't call it an A plus, but let's say an A in terms of what we expected on Wednesday. Okay, so now let's move back to the SPY, and on Thursday, this candle, just a follow through of the Fed. We also had some, we always look at initial claims here. On Thursday, they always come out. So what happened with initial claims? Big drop. Remember last week we were a little bit scared that it went up, started going up, and then boom, back down. The point is you can't just look at 1 or 2 weeks. You have to look at the overall trend. And you see it's at the lower end of this whole year. Okay? So as long as initial claims are not spiking, amazing. So this is another positive we can add to our quiver of, bullishness. The initial claims, they came in, what was the number? 207. That's very low. That's one of the lowest prints this year. Okay? So we have the initial claims, and same with the continuing claims. Okay, where are they? Continuing claims. They too went down from the highs here. So from 1.9 million previously to 1.86 million. Okay, still within the range, nothing to worry about. So everything about jobs is going exactly as we expected in our macro overview. Okay, and the other big thing that we got was the GDP number came out at 2.3% versus 3.1% previously. Okay, so 2.3% is lower than 3.1%. It's not as hot, but it's good because it's still above remember our macro. Okay, I'm going to a little macro backdrop. Reasons to stay bullish. Number 1, GDP is holding between 2 and 3%. We don't want to, if it gets too high, people might get scared about inflation and rates won't go down as fast as we anticipate. So the sweet spot is between 2 and 3%. We got a print of 2.3%. Last quarter was 3.1. It was getting on the top end. So as long as we stay within here, that's a sweet spot for rates continuing to come down because it's not that inflationary. Okay, and a strong economy also means that you have a deflationary pressures because you produce more goods, you put them to the economy. If you don't increase the money supply faster than you increase the goods supply, you will have deflation. Okay, so we had good macro data. Okay, we had GDP growth of 2.3% and initial claims going down of 207K. Okay, so beautiful. Everything is fitting within our bullish thesis. There's no bad news this week. Okay. So what else happened on Thursday that is of note? The ECB cut its rate by another 25 basis points, but they anticipated that. And the ECB is the European Central Bank, so we already looked at that. And it's exactly as expected. Lagarde comes out and says we will do exactly what the market expects us. The economy is still weak and we need rate cuts. Okay, so the rest of the world, as we saw, is cutting more aggressively than the U.S. because the U.S. economy is stronger. Now remember, when we look at the DAX and stuff, we're not looking at the economy. We're looking at the stock market. The stock market is different than the economy. The stock market's on fire, okay, because they're cutting rates. But the economy of Europe is slowing down, okay? You have to understand there's a difference between the two. Not always, but a good percentage of the time, okay? Here, because they're anticipating cutting rates and that the economy will eventually get better. That's why. So, okay, let's get back to SPY. And what we didn't look at this on Thursday, what we didn't look at is that gold, my favorite. This was Monday, of course, Tuesday, Wednesday, Thursday, all-time high, close at all-time high. It followed through on Friday, okay? But this is a huge move. Gold keeps rising. I mean, in the face of tariff talk, okay, which we didn't mention before, but this whole week, there was also the continuation of the tariff talk by Trump. It's going to go up, it's going to go down, it's going to go up. And it's the same thing. You're going to have these ups and downs in the market based on tariff talk. But what we cared about this week the most was the AI, the Fed, and tech earnings, okay, big tech earnings. And in spite of all that, tariff talk, gold keeps rising to new highs. I'm telling you. You don't want to short anything that goes to new highs, okay? So, and the tariff talk again. Every week, every day, up, down, okay? So, let's go to SPY. That's it for Thursday. So let's go to SPY and Friday. Okay. Friday, we had another big macro number that comes out, which is the PCE, okay? This is the number that the Fed looks at, core PCE, okay? And it came in at 0.2%, and it was expected to come in at 0.2%, so no big deal there, okay? Even the headline PCE deflator indicator was 0.3%, and it was expected to be at 0.3%, so nothing there. That's positive news for us, because it didn't go up, okay? It would have been better if it was a bit lower than expected, but you can't get everything, okay? And that was in the morning. Like, let's blow this day up. Like, if you see, let's go to a 15-minute chart of Friday. Okay, that's this Friday. That's right here. Okay, this day right here. This is Friday on a 15-minute chart of the S&P 500. Okay, each candle now is 15 minutes. So as the number came out, look, we were going at all-time highs, approaching all-time highs, touching it. Okay, so throughout the whole day, we had positive news. Everything was looking good. But then the White House comes out and starts talking tariffs again. Boom. Stairway to hell. Afterwards, it went from like 609, let's call it 610, down to a close of 602-ish. Okay, so that's, what is it? 8 points, one. So as the market was doing well, everybody was, getting ready to go home for the weekend. Boom, Trump comes out. Nope. We're going to keep 25% tariffs on Canada and on Mexico. Okay, 25% tariffs starting tomorrow, February 1st, and that tanked the market. Okay, however, still the market finished up on January. Okay, so it fell 1.25% in like 2 hours. No, 3 hours. Okay, he started talking about it at 1 o'clock. And by 4 o'clock, down. Oh, let's go to the daily chart again on the S&P 500 on Friday. Okay, so a little thing to mention here is that this, technically speaking, this is a bearish engulfing candle. Okay, so that's very bearish. Market should go down going forward if you just look at the technicals. However, since this was Trump tariff induced, maybe something comes out over the weekend. Maybe he eases his talk. Maybe he talks more about other things, like he's going to lower taxes now for corporations and for individuals because Trump loves tariffs, but he hates taxes. And he goes, I want a situation where we have high tariffs, but almost no taxes. Okay, that's a pipe dream, but maybe he's going to go down that route. Or maybe he announces tariffs on China. Who knows? Okay, but this is fundamentally driven. I wouldn't look at the technicals and put too much emphasis on it, unless he starts talking even tougher. Okay, the only danger is that we get into a trade war, but it's probably not going to happen. This is like, to me, this is a repeat of 2016. Slightly different. Slight difference because in 2016 everybody hated him, and in 2024 he has all the tech bros on his side. Okay, so it's Trump plus tech bros in this new term. So this is what we have to always look forward to. We kept mentioning there's going to be up markets, up, down, up, down, up, down on the tariff talk. The Trump tariff talk is always a question mark, but it's, in my view, it should always be faded because it generally will finish out in a negotiation that will benefit both parties. I suspect going forward that he does a deal with Mexico first. Mexico seems more reasonable than Canada. Canada's starting to talk tough. Okay. If Canada gets in a trade war with the U.S., that's very bad for Canada, not the U.S. Canada's going to suffer much, much more. Okay, and we have a worse balance sheet. Over the past 9 years, what Trudeau did was terrible. Our finances are so weak that we can't sustain a trade war. The U.S. is much, much stronger, and it's the world's reserve currency, and it has much more power. It has a much more diversified economy. We're very resource-oriented, and resources take a big hit with tariffs. Okay, so this is what I suspect will happen. Deals will be made over time. Okay, so another thing of note is that we are close to the high still. Okay, SPY is at 602. The high is like 610. Okay, we're close to highs, and if we look at my favorite indicator here, you could look at many, but we're almost at fear. We're on the border of neutral and fear. Okay, can we drop all the way to? It's possible, of course. We go down extreme fear, but it'll probably be around this area, maybe to the 585. Okay, so it's not gonna. I don't think it'll be a huge drop. It'll just be a consolidation type thing, because before we looked technically at a double bottom and a breakout, and then the AI came and ruined that double bottom breakout, because we were anticipating, if you remember, 620, 630 as a target. Okay, but the AI thing on Monday destroyed that. But now it looks like a cup and handle instead of a double bottom cup and handle. And Friday tariffs, it could still go up, but if it were to break up here, it'd be beautiful. Okay, so let's see how it resolves over the weekend and in the coming weeks. The tariff talk. Let's look at my favorite, gold on Friday. Okay, it maintained its highs. It's closed. If you look at the weekly chart, which is a more longer term and a more sure chart. Sure chart. I don't know if that's a word, but it's a more solid chart. It closed the week of the 27th at a new high. This past week didn't close it above this high, above the October high, but today it did. So gold closing at highs, and is it even on the weekly chart? Is not even overbought. Okay, so on the weekly chart, closed at highs. Daily chart, closed near highs. I mean, this looks, to me, this is a beautiful chart. After the breakout here, consolidated, breakout, consolidated, breakout again. This is beautiful. So when gold breaks out to new highs, what do? We also look at silver because it tends to lag. Okay, and as you can see, Thursday, Friday down, but it's starting to come back. It's starting to make a move on Wednesday and Thursday. Okay, so I'm positive on that. Thanks to gold, I think there's going to be a catch-up move in silver. You're going to be surprised. Okay, it's going to be like you're going to see in 2, 3, 4, 5 days. It can like gap up to the $40 level, 39. I know it sounds crazy, but that's how silver operates. Okay, 2, 3, 4 days of craziness, and then it's either consolidates and historically it crashes after. But first, because gold is at highs, I think silver makes a catch-up move. Okay, so back to SPY on Friday. Let's recap the week. Okay, we had the AI scare. It showed that on Monday there was underlying strength in the market, and it played out for the week. Okay, we also got off on Wednesday's big two minefields. We passed those two minefields in the Fed rate decision and in big tech earnings. And on Friday was a snag of the tariff talk and tariffs coming in. Let's see how that plays out. To me, it's still bullish. We shouldn't be selling just because of one day of like negative tariff talk. Okay, that's just ridiculous. So that's it for the week of the last week of the January, Monday the 27th. Before I go, I'd like to mention that on my Twitter I mentioned that there is a saying in the markets that it's called the January barometer. It looks at past data since 1950, and it says that as goes January, so goes the year. So if the month of January is positive, the entire year will be positive. Okay, so like take that as you may. Okay, I mean it's going back since 1950. Hirsch invented it. Since 1950, every year if January is up, and this is by the way, where is the beginning of the year? Here, this is December. It's actually this line here is the beginning of 2025. So it started out at 585 and it closed at 602-ish, 601.82. So January was positive. Does that mean the whole year is going to be positive? Well, there's like an 83% chance that it will be, according to past data, if you look at the past. Okay? So we had 75 years of data, 75 data points that shows that there's an 83% chance that it'll go up. Okay, so we have another bullish indicator as wind in our backs, if you look at that sort of thing. So let's end on that good note. Okay, that's it for the week of the 27th. And as usual, and as always, stay bullish.